Welcome back. You're watching IDFC First Bank presents Leaders of Tomorrow Season 11. In this segment, we'll be focusing on why smart investing is a crucial aspect of financial growth and success. I'll be in conversation with Harshvardhan Roongta, Director, Roongta Securities. Joining me live right now is Harshvardhan Roongta, Director, Roongta Securities. Thank you so much, Harshvardhan, for joining us today.
Well, it's always a pleasure to be on this show, Ritika.
So let's dive straight in, Harshvardhan. Tell us, at what point should entrepreneurs consider seeking professional advice for their investment strategies, right from the outset of their business launch, or perhaps once they've garnered some traction?
So, well, Ritika, you need to seek professional help from step one. Imagine a situation you've gone ahead and done some investments on your own, or by hearsay, and you've gone into it for say about 5 years or 10 years. And then you go into seeking professional advice, and there you realize that you've done something wrong over the last 5 years or 10 years. There is a lot that is already lost. So you need to go back. You need to start all over afresh. And when you talk about investing, time is the greatest essence to your side, and you already wasted a lot of it. So what I'd recommend, as I said earlier, everybody has their own area of expertise. So while you may be in your field doing the best and you have full knowledge about it, investments, portfolio creation is a different arena altogether. And if you can take advice from step one, irrespective of the amount, many times people do believe that I need to have a very large sum of money to take professional help. No, that's not true. You need to ensure that you are on the right path so that you caught on to the right, path, and thereafter you can just simply keep topping up as your income goes up. So there is a huge cost to pay if you start wrong, come back again and start all over again. Might as well take professional help from your day one.
So what strategies can entrepreneurs employ to stay abreast of market trends and also flexibly adjust their investment approaches in response?
So, well, there is enough of information that is available, in the public domain these days. Unlike in the past, where you had to dig into getting information, even the basic information regarding any investment product or companies for that matter. I think there is information explosion right now, and if you do just a little bit of digging around, you look at a couple of news channels, you will know what is happening around in the economy, the business news channels I talk about, and the investment options. So I think it's not difficult to get information these days. What is difficult is to make sense out of that information. So I think if you're reasonably smart, you'll be able to differentiate between what is shown to you and what is the reality, and you can take rational decisions. And of course, you have to validate this information that you're going to see and interpret with somebody of this field. So if you have any finance department person or an investment professional with you, you can do simple conversations. You have enough of information to deal with. To take rational decisions these days.
On that note, tell us, are there specific industries or investment opportunities that entrepreneurs should prioritize their focus on?
Oh, well, not really. One way to start would be, of course, so if you have your entrepreneurial venture into a particular industry, so you could be, say, probably an automobile components industry. You could be a part of that. You have your own business into that industry. It's very easy for you to know what others in this industry are doing because you're right in that business, right? So it's easy for you to understand which companies are getting what kind of orders. So in case you want to be sector specific, I think the starting point should be the industry in which you yourself are involved. Because you have all the information and you have the wherewithal to track when you should enter or exit in that business. Because if you're investing or looking at sectors, then entry and exit points are important. And the only way you can get that information if you're already in that field. So if an entrepreneur is looking for any sectorial allocation, I think to begin with is the best in the sector in which they are already working. Though of course it may lead to concentration risk all over again. However, that's easy for them to track, and that's what I would say. Otherwise, a sector which you can track outside the industry that you work in is also fine.
Harshvardhan, tell us, what are some of the prevalent risks that entrepreneurs should have on their radar when delving into investments?
Yeah, so this is important actually. So, most of the entrepreneurs will overestimate their cash flows. So I think, the advice that we would give to entrepreneurs, especially the ones who are starting off and they're trying to establish themselves, or they're in the mid-level, path right now. I mean, you need to be very careful about liquidity risk and the sporadic cash flow. So if you're investing to any product which has long-term lock-ins, maybe you would want to consider that, because that is not something that you would want to at this juncture of your career. So be mindful of the liquidity risk of any product, how easy it is for you to liquidate in case of any requirement. And the other part that you need to be careful about is do not overcommit to any investment, because you would in future, if you have sporadic cash flows, and that could possibly lead to any kind of penalties or losses onto your investment. So as I said earlier, commit a smaller amount so that you have a discipline in investing, and top it up as and when you have surplus cash flows in a given period.
How can entrepreneurs then effectively manage risks while maximizing their investment returns?
So, Ritika, the only way to manage risk, okay, so risk could be in any form. There are different kind of risk. We're talking about inflation risk, we're talking about capital risk, we're talking about volatility, etc. The only way to manage risk is to diversify. I mean, that's the only way you can mitigate risk, and to have an appropriate asset allocation plan. So, whenever you create a portfolio, understand that there are some risks which are very specific to a particular industry. So what do? You diversify across different industries. So you're not subjected to a particular movement in a particular sector, so that doesn't impact your entire portfolio. So diversification and asset allocation. These are going to be the basic principles on which you would build your financial plan to manage the risk which you cannot see, or even for those risks that you can.
Are there any tax considerations that entrepreneurs need to take into account while making investment decisions?
So in fact, we've always maintained that in case you're building an investment portfolio, look at the merit of a product. So you have a product, just evaluate it independently. Would you invest in this product because it solves a certain problem of yours? It helps to achieve certain goals in the future. Do not confuse or get distracted with tax benefits. I'll give you an example. Now, many people, hypothetically would have invested into real estate considering certain tax benefits that are available. So you take a house on a loan, and you assume that you will get tax benefit on the interest that you pay under Section 24, and you will get other tax benefits. And this is like probably a 20-year loan that you've taken, and you invested in your property. What if a situation such arises, and it's very much possible that all the tax exemptions that you are seeing, that you get into the old tax regime versus the new tax regime, the new tax regime becomes by default and becomes mandatory, and all the tax exemptions are taken away. You're stuck with this loan for 20 years, and all the tax exemptions because of which you took this loan is taken away. So what you should do while considering an investment is purely look at the merit of that product. Is that product helping you meet certain financial goals, even if it does not give you tax benefits? If the answer is yes, then you invest in it. And if that product comes with certain tax benefits, it's an added advantage. So where your focus is, how would you look at that product independently? If it solves your problem, whether or not you get tax benefits, you invest in that. Do not get distracted by side benefits that you get with your investment, such as tax benefits.
Finally, tell us what are some of your big ideas for New India as far as the investment landscape is concerned, or maybe in fact just that one big idea that will have a profound impact on the investment industry in India.
Okay, so it's very, very clear. I mean, we talk about equity being a good asset class for long term, right? So it creates wealth if you've been investing. There's going to be intermittent volatility, but you need to stick around. You need to be invested, and then you will certainly make money. Now the question arises that you don't simply make money by staying longer if the underlying economy is not progressing. So, say for example, you say that I'm in a country which is going through certain problems of their own. There is no economic development there. Can you just invest for 20 years over there and make money? No, you will not. You need to be in a country which is growing, financially, economically. Now, if you are a part of that country and you are making investments, then over long term you will certainly make money. So you should be thankful, and we all should in fact be thankful that we are in that decade, in that golden decade in India, where we have an opportunity for growth. We have the mindset, we have the knowledge to invest. All we need to do is control our behavior. So if we believe in the India growth story and you want to be a part of it, there is no other way but to participate in the equity culture, because that's what economy is made of. So do invest in Indian growth story if you believe in it. Stick around. So second formula is going to be, the second rule is going to be that it's not going to be an easy ride only one way. You need to be sticking around. You need to have the conviction and the perseverance and the discipline. You will certainly make money over a period of 8 to 10 years minimum if the underlying economy is growing, which India looks like doing that. So India shining, come be a part of it.
Well, it was great chatting with you, Harshvardhan. Thank you so much for joining us today. And with that, it's a wrap on this edition of IDFC First Bank Presents Leaders of Tomorrow Season 11. We hope you enjoyed the conversations. Thank you and goodbye.